This is the Debunking Economics Podcast with Steve Keen and Phil Dobbie.
The Archives.
Episode 220. Goodbye, Shinzo. Farewell, Abenomics.
In Japan, Shinzo Abe is stepping aside, citing ill health. The big question for Japan is, who's going to replace him, and will they continue on the same economic agenda he started to try and tackle the country's struggling economic growth and deflation? Many argue his policies haven't worked, but the question is, would the alternative have been even worse for the country? It's surely not a time for more fiscal control and, dare I say it, austerity. That's today on the Debunking Economics Podcast with Professor Steve Keen. I'm Phil Dobbie. Welcome along. So, Steve, we've all got to, I guess, to get used to the idea that we've had this massive drop in GDP from the coronavirus. And the big question we've all got now is what's going to happen next? Do we all become like Japan, where, of course, you know, they're used to low GDP. GDP growth has been trickling around 1% or less for the last decade. And in fact, the decade before that, they're calling it the lost decades for Japan. But if you take those 2 decades and then go back to the 1980s, you've got this long period of virtually zero inflation. In fact, periods of deflation. And the answer to that from Shinzo Abe, of course, particularly to tackle that deflation, was a three-pronged approach: monetary easing. In other words, very low interest rates from the Bank of Japan, along with introducing quantitative easing before it became fashionable, fiscal stimulus from the government, and structural reforms. Those 3 prongs are what became known as Abenomics. Now, that pretty much sounds like what every country is now doing, isn't it? Because, you know, the similar 3-pronged approach, which is interesting because it hasn't really worked for Japan, has it? So what makes people think it's going to work now?
Well, it's worked for Japan in the sense that what they had beforehand was immense level of stagnation, and after a period of about 20, it's not actually a lost decade, it's almost like a lost quarter century. But in the final period of that lost quarter century, it has started to get some growth. But it's nonetheless, the economy hasn't died. And if you look at what's gone on, it's been non-stop deficit spending. And one thing I saw a lovely little meme on the on internet a couple of days ago of a son talking to his dad. The son wearing a cowboy outfit. It's obviously he's been done something playing cowboy in the backyard, and the dad is saying, "That's mad, and that's mad, and that's mad." You know, and they said, what the kid's doing is talking about, well, if you have runaway government spending, you're going to have runaway inflation. And the dad says, "Japan." I said, but if you do it for that long, you're going to lose control of your currency. Japan. And I think Japan confounds everything about the mainstream expectations.
So is it a good argument in favour of monetary theory then? Apart from the fact, obviously, they haven't totally embraced it, though, have they? Because they've still got this expectation that they're paying it back. In fact, 22% of the government spending goes back on paying interest payments. If they just didn't do that...
That's inevitable, and this is the funny thing, because I mean we talked a bit about the mechanics of this, and we'll do more obviously as the coming months on the mechanics of how the government actually finances itself. But if you think about I'll go back and give you the data here, and this is the quite fascinating thing. Of course, this data ignores the data that I focus upon, which is absolutely critical, but I'll ignore it for the meantime. And if you go back to 1980, let me check out the data here, 87, the Japanese government debt peaked at 64% of GDP. Absolutely terrifying. And then they had this wonderful period of about a decade, so going from not quite a decade, about 5 years, 87 to 91, so halfway through 87 to halfway through 91, so 4 years, where they managed to reduce government debt. Fantastic, great performance, guys, from 64% of GDP to 54%, so a 10% fall. Since then, it has gone from 54% of GDP to its current level of 218% of GDP. Now, if you're a mainstream thinker, you're going to say, "Oh, runaway inflation, Japan," because you take a look at the numbers and the CPI. Just look at the inflation rate over that period. We're going back to the highest rate of inflation Japan has had in the last 40 years. and trust my program to decide not to work on me all of a sudden. Hang on a second.
Well, while it's coming back, while you're yelling obscenities at your machine, I mean, the other way of looking at it as well is you look at what the Bank of Japan is holding in assets, and that's gone from 2010, 120 trillion yen in assets, up to now 578, just before the coronavirus. So it'll be worse now, 578 trillion. So I mean, that's and the vast majority of that is government bonds. In fact, increasingly the proportion of it is government bonds. So that's just buying up that debt. So and that's where those interest payments, having to pay those interest payments, are coming from. But the mechanics of it, if there was another way, they wouldn't have to do that.
Well, the point we made a couple of days ago, I was actually finishing the inflation point because I wanted to get that in there. In 1980, just the beginning of 1980, so before this period, so this is going back 40 years, the inflation rate was 8.7%. By 1990, when its crisis began, it was down to 3.9. Since 2000, it has normally been hovering around zero. There have been periods like 2002, and it's been minus 1.5%. It's been as deep as minus 2.5% during the financial crisis in 2009, and it's currently running at 0.3% per annum. So,
but that's a problem, isn't it? I mean, not having inflation, having deflation, which, by the way, is what we're now seeing in Europe. The question is that temporary because of the coronavirus, or is it the start of having deflation here? That's, I mean, for reasons we've spoken about in the past, deflation is not good. I mean, first of all, who's going to buy stuff if you think it's going to be cheaper in the future?
Yeah, and this is the danger. They've fallen into a classic debt deflationary trap, but they've managed to prevent how deeply they've gone into that trap by massive levels of government spending. And so that's the thing which is different about Abenomics compared to what the mainstream politicians and economists are doing elsewhere in the world, is they haven't felt restrained by running a government deficit. They've kept on doing it. And because they've run a government deficit, their debt levels have gone, in terms of government debt, from as I said, a bottom 55% to 220%. So basically a fourfold increase in the level of private debt to GDP. And just recently I had a bit of an exchange with someone over the infamous Rogon and Rogoff paper, Reinhardt and Rogoff paper, about how once you get past 90% of GDP, it's all disaster. Well, this is almost three times that. And Japan, whatever else it isn't a disaster compared to the macroeconomic performance of the rest of the world. So
how did they say that disaster would play out? Did they say, yes, that would create runaway inflation?
They said the disaster played out by, first of all, was producing a spreadsheet with straight-out spreadsheet errors, then by aggregating things. So 1 year in New Zealand was equivalent to 40 years of data in the UK, and a whole range of it was almost as good. As good as William Nordhaus.
But what did they say?
Much lower than that.
But what was their conclusion, though? That if you had if debt got over
false.
Right, okay. But their false conclusion, let me get to this. They were saying if you got over 90...
over 90%, your economy will slow down.
Right.
Okay. Rate of economic growth.
It's not speeded up though, has it? I mean, that's for all of it. And I guess that's the other question. I mean, they're not seeing growth. That they haven't seen inflation go any lower, I guess is your point. It would have been much worse if they hadn't. But they're also not seeing the economy pick up. And then there might be other reasons for that. I mean, so demographics we know is part of it. They're not exporting anymore. They've been through a period of growth, and that's all flattened. So they're still selling cars. It's just they're not selling more of them. So is that so an economy without growth, is that a problem, or is that something that we're going to have to accept as being the new normal? Because things can't grow forever, can they?
Well, the thing about Japan is that it's actually had the different thing about Japan. Its demographics are the opposite of the rest of the world. Its population is falling. So when you look at Japan, you look at American growth, you've got to factor in that there's a rate of population growth of about 1%. You look at Australia, it's about 2%. Look at Japan, it's 0 to minus 5% population growth. So consequently, when you look at the per capita figures, Japan has actually been doing quite nicely on per capita growth for about the last 15 years. It did very badly between 1990 and 2005, but for the last 15 years, it's been doing about as well or better than the rest of the OECD. So it's not a salutary. You've got to be cherry picking the data to describe Japan as salutary tale, and equally cherry picking it to say it's a lesson for the rest of the world what the rest of us should do. But certainly it's achieved positive per capita economic growth of the level of or better than the rest of OECD for most of the last 1.5 decades.
Yeah, during which time, many countries are running the opposite of Abenomics, which is austerity, and that hasn't worked too well either, has it?
Yeah, well, this is the thing, because they haven't panicked about the level of government debt and haven't gone into the austerity stuff. They haven't taken demand out of the economy. And this is the point that I think I'm glad to see countries saying, they're going to follow Abenomics, because at least it's an improvement over neoclassical economics, because the obsession about paying down government debt, which you can already see happening in the discourse in the UK and Europe and America, is pointless. And the Japanese fundamentally empirically show that, because they've had this dramatic increase in government debt and the economy has sailed on successfully, relatively, through it. What they have had, of course, is a trade surplus. And that,
that helps.
I'm contradicting MT, that insulates them from the impact of the government deficit. Doesn't leak out into a demand for imports in the rest of the world and undermine the money creation of the government.
But getting back to the fact the Bank of Japan is holding all these bonds now, all these government bonds as assets sitting on their balance sheet. I mean, that is QE, isn't it? I mean, the government is, we're getting back to the mechanics of how monetary theory might be applied. But I know you're not a big fan of QE, because basically all this money is going through the finance sector. So you've got the Bank of Japan, as I said, going from 120 trillion yen in assets in 2010 up to 578 trillion, and a vast majority of that now in government bonds. So is that a good thing or a bad thing?
Is it government bonds or on shares? I know they've got a pretty heavy.
No, a lot of it is in government bonds. I mean, it had been about 50-50, but now I think I might have got this wrong, but sort of order of magnitude like 80-20. So they've been buying up big in government bonds. But that's how they've been buying the government debt, basically.
Yeah, that as it happens is irrelevant.
Right.
And this is one of the things where, again, I've learned a lot by putting together those Minsky models recently, because if you look at and we talked about this in a previous podcast, when the government spends more than it takes back in taxation, it's adding money into the deposit accounts of private individuals at private banks, and that is recorded as well as an increase in the reserves of those private banks. So the individuals, you and I, get money to spend, but what the banks get is an increase in their reserve accounts at the central bank, and those reserve accounts they can't spend those because they're assets. They're not on the liability and equity side. Money is what's on the liability and equity side of the banking sector. So they can't do anything with it. Then you come along and say, we're going to sell you treasury bonds to the private banks. When you make that sale, you issue treasury bonds equivalent to the deficit that you've run. Okay. The private sector looks and says, well, we've got these reserves which have been created by the deficit that are earning us no interest, and we've got this offer of buying treasury bonds that will pay us interest. And you've got to be pretty stupid.
Be nuts not to. Yeah,
you take
exactly.
it. Okay. So in that sense, the reserves that are needed to buy the assets of treasury bonds are created by the deficit. Now, once you've done that, you then have to pay interest on those bonds. How do you pay the interest? Well, the Treasury, since it issued the bonds, is paying the interest. That means that it pays money into the equity accounts of private banks, which means their reserves rise as well. Okay?
Right. But that is the figure that's always used, isn't it? I mean, in mainstream media, and I gave that percentage, 22% of what the government is spending is money that's being used to pay for the debt it's racked up.
And where do they get the money from? They borrow it from the central bank.
So it doesn't matter whether it's 50, 80,
Yeah, what interest does the Treasury pay when they borrow from the central bank? Zero.
Yeah.
So when you look at this is why the double entry bookkeeping is so important. When you
this is why there's a need for a new terminology, isn't it? Really, for all
calling it debt. I mean, I'd like to use a form for it, or maybe surety or something of that nature. A term which implies that it's some sort of necessary backing, but it isn't an obligation to repay, which is what the word debt always means to us. But see, if you look at the mechanics of the government running a deficit, it simply spends more than it gets back in taxation. Now, to do that, it's got an account at the central bank with the Treasury, effectively a Treasury deposit account at the central bank. So that could go below zero. Now, if you have a rule, and that's okay, there are some central banks which allow that. So the Treasury can have a negative balance at the central bank, just like you and I can have a negative balance in our private accounts if we were to negotiate an overdraft with the bank. Of course, we pay penalty interest rates on that.
Yeah.
The Treasury pays no interest on those. So if you require the balance has to be zero, which is most countries do that, must have a non-negative balance in the Treasury account at the central bank, then the Treasury is obliged to issue bonds. When it issues those bonds, because the reserves have already created the money, the deficits created the reserves for the banking sector snaps them up. The money is transferred from the reserve accounts of the private banks to the Treasury deposit account, keeping it at or above zero. So that's the function there. Now, once you've done it, you've got the debt, you've got to pay the interest. And that's where, looking again at the double entry bookkeeping, the interest is an income of the banking sector. So that goes on the banking sector as equity, the finance sector's equity. That also increases their reserves.
Right.
And then when the banks themselves spend in the broader economy, that money then transfers out of the bank's accounts into our private accounts. So the interest that government is paying is part of the money creation process.
Right. So
now,
you're doing two things.
By borrowing from the central bank on which it pays zero interest.
Right. So what you're saying is you're doing two things at the same time. Then, in a way, the government is able to spend because it's got a bigger budget, and on the other side, because you've got more reserves sitting in banks, banks can lend out more as well.
Yeah, well, that's right. The banks themselves, or the bank would lend out the reserves. Oh, hang on, mate. Quick slip there. You were caught live on TV. Sorry. But what happens is the banks have more reserves that they want to employ in other fashions. So those reserves themselves are part of what the banks are then using when they buy, their own, buy assets, buy whatever else they can do, whatever else they're allowed to buy with those reserves. I think they're fairly open slather these days. There used to be rules on what they could buy them with. It's part of the money creation process. Paying interest on government debt is part of the money creation process of the government sector. Now, you're talking about the central bank buying those bonds. What that does is, again, how does the central bank buy the bonds that the Treasury sold bonds to the finance sector?
Yeah.
Okay, the first stage. The central bank is then buying those bonds off the finance sector. What happens when they do it? The amount of bonds in the asset side of the banking sector goes down. The reserves go back up again.
Mm-hmm. Yeah.
Okay, so you got stuck with more reserves than you want again, so then you're going to go do some more gambling with the reserves. But equally, the amount of interest you pay to the banks, the finance sector goes down, so money creation goes down.
So it's always better if the banks themselves are buying these bonds. So why?
To some extent.
So why go down the road of QE then? Just because they thought, well, there's so much being issued, the banks are just not going to absorb all of that? Or
well, a lot of the QE. Richard Werner's version of QE is different, and I haven't read Richard's stuff recently enough to cover what he describes as QE. So my apologies, Richard, if you're listening and I stuff up on this one. But QE as practiced in America was buying bonds off the private banks, and not just Treasury bonds in this case, but also corporate bonds as well, which would then mean that they have their income earning stuff has gone down, their non-income earning reserves have gone up. That then encourages the banks to use that money to buy income earning assets. When they do that, the reserves don't change because the people that they buy those assets off bank at the banks and it comes back in through the deposit door. But they buy shares and drive up share prices. So the whole effect of QE is to make shares more expensive. Well, that makes wealthy people who own shares really even wealthier. And that was the idea behind that was to encourage the wealthy people to spend. That was Ben Bernanke's recovery. So QE,
and then we get trickle down, and the world would be glorious. Yeah. But I mean, that isn't happening, is it? And that's because the other part of Abenomics obviously was to try and push consumption, and that's where it all seems to have failed. They're not consuming more, and in fact it's been a bit bizarre lately because they've done the exact opposite of what you would do to try and increase consumption. And this is why I wonder whether Abenomics is going to derail a bit, because even with Shinzo Abe as prime minister, they're doing things like pushing up the sales tax to try and and they said this is to try and recover some of that government debt. I mean, they did it, from last year sales tax went from 8% to 10%. curious time because even before the coronavirus, the economy was contracting. We had negative GDP for one quarter, and it was likely it was going to happen again, and obviously it certainly has now. So here you've got an economy in decline. And your answer is, well, we're going to pull even more money out of the economy.
Yeah, I mean, this again shows that they don't. When you call it Abenomics, you're saying it's the politicians doing it. The politician is doing something slightly different to what the textbook tells him, but he still doesn't understand the system. So
even though it's named after him.
Yeah, absolutely. I mean, Reaganomics, remember that?
Yeah.
Reagan understood the comics. That was about it. Even that might be a question. So there's many of these policies which are going to be a mishmash of things that are sensible and things that aren't. And the reason I'm going to go back to my favourite topic now as to why this stuff had some degree of success, and that is that while focusing upon the level of government debt, the mainstream and the Japanese completely ignored the level of private debt. And what did that do? If you go back to the early 1960s, private debt in Japan was 120% of GDP. And that's much higher than it was in America. But this partly reflects the history of Japan, that American corporations and American banks tend to be independent groups and, robber barons and all sorts of wonderful personalities like that. The Japanese are organized into what they call keiretsu. So there's a Mitsubishi keiretsu and I think there's a Toyota keiretsu. They're industrial financial agglomerates. Will there be a bank which is part of that, which by custom lends to the industrial side? So rather than needing equity finance, a lot of investment in Japan is debt financed, but it's debt financed by a bank, which is part of the overall group. So It's not debt finance the usual way we think about it. But that reached 120% of GDP and flatlined. It rose from 120 to 140% in the mid-70s and then flatlined there until 1980. And that is, have you ever heard of, what the Japanese call the 1980s?
No.
The bubble economy.
Right, okay.
Quite literally. What you then had was this huge stock market bubble and real estate bubble, and the level of private debt went from 140% of GDP to 220%.
So they were like the forewarning that we all ignored then.
Absolutely a forewarning. Again, Japan, because the data screams actually that this is what's causing the trouble.
So private debt in the 80s, and they're still paying for it now. A high level of private debt in the 80s, they're still paying for it now. They've tried to correct it by upping government debt, but it's not been enough to correct the problems that they had. Exactly.
So if you look at the level of private debt, again, that said it went from, it rose from 140% of GDP in 1980 to 210% in 1990 when their crisis began. Its rate of growth slowed down at that point. It finally peaked at 220%, and that's in 1995. And from 1995 to 2005, remember that 15-year period I gave you a short while ago? For that period, debt fell from 220% to 160% of GDP, so a 60% of GDP fall in the level of debt. That was a major source of the stagnation across that period.
Yeah. And that would explain why we're seeing things like, for example, the fact that exports since the global financial crisis, I mean, the Japan's exports haven't really picked up. They were rising up to that point. They pretty much have plateaued. It's almost as though they've lost that innovative edge which has carried the country forward, and that will be because of this fear of investing too much because of what went before.
Yeah, I mean, in fact, if you ever see the old movie The Rising Sun?
Yeah.
Okay.
Long time ago, but yes.
We've played the theme. Is that part of the podcast when we broadcast this thing?
No.
But at that stage in 1990, everybody thought Japan was going to take over everything. Okay. You had what was the main form of
that we do with China now?
Pardon? Now we do.
Like we do with China.
That's right. But the main, if you had a musical machine, what was it? Let's see. Well, they're testing how old you are here.
Well, a jukebox or
a portable music machine. What was the portable?
Well, like a boombox or a.
Oh my God, you are young, aren't you? A Sony Walkman.
Oh, a Walkman. Oh, yeah, I know. But you had them for 2 weeks and then they broke. That was my experience.
Doesn't matter. The Japanese still made money selling them to you. But like,
because they kept them breaking.
What was the leading car company at the time? It was Toyota or Honda. Okay. Or the innovation was
Honda, yeah.
Honda was the leading innovator.
Yeah.
So right to 1990, it was the dominant economy, and people thought it was going to take over the whole planet, and that was the theme of the rising sun. All came to a cropper in 1990. One of the amusing things about Japan, one reason I love it as a case study, is that the stock market bubble that went along with the housing bubble, the stock market bubble actually burst on the 31st of December 1989.
Well, it's a nice symmetry.
Very last day of the decade. At something like 39,994 points, almost 40,000. And it then fell to as low as 7,000. I think the Nikkei is somewhere around 17, 20,000, 25. I don't follow it anymore. But that sort of level now. So they've never recovered the level of stock market prices. It was all driven by insider trading and made massive amounts of credit and so on. So, and when you look at my argument for the relationship between change in private debt, which is credit, and unemployment. My favourite example is usually America on that. But if you look at the data for Japan and say, what is the relationship between change in private debt and unemployment for the duration of the data starts in 1966 on the correlation of change in private debt with the level of unemployment is minus 0.9. Okay, and what does the neoclassical assumption says? Assumes it's zero.
Yeah.
So they're completely wrong, and Japan is a classic case for my approach to credit and for modern monetary theory's approach to government money creation.
So the hope is, of course, isn't it? But it's been shown that it doesn't make a jot of difference, it seems. So if you keep interest rates low for a long period of time, then that is going to encourage people to borrow, and they're going to borrow and they're going to invest, and that's going to see the economy grow again. That hasn't happened for them, and I'm just wondering whether if you have, and whether this is again another warning for the rest of the world. If interest rates are low and that becomes the new normal, it starts to lose its impact because people are going to go, I can invest any time. There's no rush.
Well, you're already in massive debt. You've seen a debt crisis beforehand that wiped out a large number of companies. Your corporation has been dominated in its cash flow usage by not investing, which what Sony and Honda and Co. used to do, but by maintaining or reducing its level of debt gradually over time. You have 30 years of that, and you lose the innovative power you used to have. So it's important to get that level down. The private debt level in Japan is now roughly the same level as America. So they've reduced it over a 30-year period. Literally, you can date it back to 1990. But they wasted 2 decades in getting there. And still they're only in the same situation as America. That was going to be my next question, actually, about how it relates to America. Because if you look at those 3 strands of Abenomics, which is basically low interest rates, more government spending, and structural reform. I'm just wondering, you look at what Donald Trump wants. He wants pretty much the same thing, doesn't he? He wants the interest rates to be as low as possible. He is racking up government spending. Sadly, he's using it, with tax cuts for the rich, but that's his structural reform as well, isn't it? Making the rich richer. I mean, is there a big difference between Abenomics and Trumponomics? Or are they fundamentally the same thing? Well, I think it's a half-baked understanding of the role of government spending with a quarter-baked understanding of the role of private debt, or zero-baked understanding of that. In a milieu set by a credit crunch. That's, I mean, Donald Trump, to his credit, did want that government spending to go into infrastructure investment. It just never happened. Yeah. So, I mean, he was making the right noises. Several infrastructure weeks, which have never occurred. So, Japan in that sense did spend a large amount of money on infrastructure. And people were saying you're getting 6-lane highways to fishing villages, which is part of the waste that people worry about in that situation. But the fundamental thing, Japan was scarred by the debt bubble, the private debt bubble of the 1980s, scarred by its aftermath, and because Japanese corporations rely upon debt finance rather than equity finance for most of their investment, and the equity is plunging as well because of the collapse in the Nikkei, you had the innovation engine disappeared. And strangely enough, if you look around the world and say, where's innovation occurring these days? I'm afraid it's back with my mate Elon. There's not a lot of investment going along in most of the world. Why? Because we're all in much the same situation the Japanese got themselves into.
Yeah. So is Japan in a really bad place, or is it in? I mean, it's still a strong economy. Okay, they're not seeing that innovation. Maybe that'll come back. But I mean, there's not a lot of people living in poverty. It's still exporting a lot of cars. I mean, it is making electric cars. They're pulling back a lot of their production back to Japan to try and make this transition to building electric cars. So it's an economy that was initially built on growth, and it's had to transition to slow growth or no growth at all. So can a country do that, or does that put itself in a precarious situation? Well, and similarly, could we see China going a bit the same way? You know, they've had this period of extensive growth. Could they go a bit the way of Japan? I mean, they haven't got the private debt issue. Well, they do have a lot of private debt, of course, as well, don't they? But a lot of it's been funded by government debt. But could they go the same way?
They could, but I think the Chinese are more conscious of the role of monetary power fundamentally. And I mean, they basically encouraged a private debt bubble back in 2010 as their remedy for the global financial crisis. From memory, this figure sticks in my brain. China's exports in 2008 fell 46%. And in response to that, they because again, most of the banks in China are state-owned or certainly state-directed, they basically told the finance sector to lend to anybody with a pulse. And you went from 100% of GDP as the private debt level to 220% in about 6 years. And it's basically 3 times the rate of growth of private debt during the Japanese bubble economy. But in the aftermath, you've still got this enormous level of government spending for infrastructure across the entire country and the Silk Road, the One Belt Initiative. So this is, I think,
and a somewhat bigger population as well.
Somewhat bigger, about 5 times the size of Japan.
And in fact, you know, if you look at them moving towards the middle class, it's a growing population as well.
Oh yeah. Well, I mean, China also imposed the one-child policy for a while, and that's been taken away by the. I think it wasn't a Deng brought in the one-child policy, but it's been certainly under Xi and his predecessor. That's gone. So you've got a growing population in China, but it's 1.4 billion people. I think that may well go into reverse at some point as well. But Japan has got a negative demographic and is still, in terms of per capita living standards, has improved for the last 1.5 decades.
Yeah. So they need a few dodgy contraceptives or a government-funded scheme or something like that. You know, you're paid to procreate.
This is the rainy season up here. Just wondering how much the rain outside.
I can hear a little bit of it. Absolutely, yeah. There's something and we were getting on to what you should do on a rainy day. They need more of that in Japan, maybe. Look, so what happens next in Japan is the question. And what do you think? I mean, there is a danger. So is it Yoshida Suga? I'm not sure. The front runner, the chief cabinet secretary, is a front runner to replace Abe, who is calling for more fiscal constraint. In other words, the complete opposite of Abenomics. Let's see how that works out for them.
Well, that'd be a negative. Again, this is the trouble. I mean, they'll do this, and then you'll have an increase in unemployment. You'll have a slowdown in the rate of growth because you're taking money out of the economy. A surplus is deflationary. It probably will drive them back into further actual price deflation as well. Yeah. And then they'll be forced to go into reverse once more. So it's this half-baked understanding that politicians and policymakers have courtesy of mainstream economics. And the advantage of Japan is that it's only half-baked, whereas America, the UK, Europe and Australia are quarter-baked.
So it is interesting, isn't it, just as, final observation, that putting on the hats and talking about the madness, but pointing to Japan. Normally when you talk to people about the idea of government spending more, putting more money into the economy, everyone talks about runaway inflation and talk about Venezuela, for example. I mean, the answer is, well, okay, that's Venezuela. What about Japan? Exactly the same situation.
Yeah. It's the opposite. It's doing everything that's supposed to be causing problems in Venezuela, and it's got deflation. Yeah. So, and just in terms of growth, I mean, it's had some periods of substantially negative growth in nominal terms. It was, again, I hope my program works here, it was as bad as minus 6% during the financial crisis. But they still have a rate of real economic growth at the moment, and they've been sustaining that for about the last 10 years. So, all the lessons people take and say, don't let the government debt get too high. What is the level of Japan? 4 times the level of Maastricht. Don't have large deficits. They've got 2 to 3 times the level of Maastricht. It's giving the lie to conventional thinking, and it advocates both modern monetary theory and my credit-based analysis. But of course, the politicians haven't learnt from it. They're still regurgitating what they learn in MBAs, and there they are wanting to cut the government spending again, just what the country doesn't need.
Right. Well, we'll look back at Shinzo Abe and say he did a good job, perhaps, even though he's perhaps leaving under a bit of a cloud right now. He's not well. Is the real reason he's leaving, but I'm sure part of it is because he's not seeing the recovery he would have hoped for, and clearly there's political pressure. As we're seeing, which might see a complete reversal of it all and the undoing of it all. It's going to be interesting to watch what happens in Japan, isn't it? Good to talk, Steve. I'll catch you again very soon.
Okay.
Next time, Steve Keen's favourite pastime lately, debunking Nordhaus. Just how much has Nordhaus's climate change work really driven us off the agenda of climate change? Perhaps a timely one, given the Extinction Rebellion out in force. How important is climate change? How wrong is William Nordhaus? That's next time on the Debunking Economics podcast with Professor Steve Keen. I'm Phil Dobbie. I'll see you then. If you've enjoyed this podcast, then please share it with your friends, like it on YouTube, and subscribe to this channel.